Welcome back to Delta Code, where I decode investing in stocks and crypto. I am Delta, dropping some serious alpha so you and your portfolio can be most sigma. In today's episode, I will be covering the most profitable crypto projects. I will show you my earnings per token analysis similar to earnings per share in stocks, and why I believe you should own these revenue producing projects instead of memes. And most importantly, why the ticker is ETH. All right, so we're going to start off by taking a look at this table that I've made of revenue producing projects in crypto. Starting off with Jito at the top, has $176 million of revenue. The price was $2 when I did this analysis. Obviously, this was before the election and before the prices went up, and we'll take a look at the price change. So revenue 176 million, token supply a billion. Currently, the circulating supply is only 128 million. That means the fully diluted value right now is 2 billion. If these tokens, the whole billion, get calculated times 2, right? So that means there's a $1.7 billion of unlocks that can dilute you if you're an investor in this project. The price to earnings ratio is 1.4 and earnings per token is 137. So that's why this is in green here. A great PE ratio, great earnings per token relative to the token price, but the dilution is in red. Use that to make your decision and judgment. Next up, MakerDAO. This is one of the best, oldest projects and also has one of the smallest supplies. It has a 1 million token supply and currently only 900,000 are in circulations. That is amazing tokenomics. This is the best tokenomics of any project in a top 100 in my opinion. Earnings per token is 301. Relative to the price, it was 1,100 then. I think it's 1,500 now. Still amazing. Also, Maker does a buyback. They have a burn mechanism where they burn some of the Maker tokens, which is sort of like a stock buyback. Next swap, AERO Finance. This is a base DeFi project. It was $1 per token at the time of analysis. Price to earnings ratio of 6.8 and earnings per token of 15 cents. Also has a very large unlock of almost $1 billion. So keep that in mind if you invest in this. Pretty much anything ever, you should keep in mind how much unlocks are happening. What is the fully diluted value? Next up, LDO, Lido. This is the liquid staking token. Lido is the biggest liquid staking derivative on Ethereum. I think they control about 30% of all Ethereum staking. Currently, the price to earnings ratio is 9.3, and there's 10 cents of earnings per token of a price of $1, so 10%. That's a good return. Curve Finance, CRV, 23 cents at the time. Price to earnings 9.47. Earnings per token 2 cents. Again, almost 10% as well. That's why the price to earnings ratio is there. DYDX, price to earnings ratio of 10.3. Earnings per token of 9 cents of 88 cents per token. Again, close to 10%. Fully diluted 680 million. About 100 million possible dilution. Not bad for a project of this quality. Now, Athena, ENA, 40 cents at the time. I think it's maybe 50, 60 now. Is 12.25 price to earnings ratio and earnings per share of 3. Not bad. But there is a huge unlock happening in March of 2025. This could still appreciate plenty, but I would be cautious about next year, especially in end of Q1. So keep that in mind. We may do a short of ENA at that time. Unlocks. This is a huge unlock. Now, ENA is voting on a proposal to share revenue with token holders, so this might give it more value, but if you are valuing like traditional equities, then 12 is not bad. Not bad, but keep in mind the unlocks. We'll skip Ethereum for now. We'll go to Aave and Uni. Aave at $133 has price to earnings ratio of 36 and earnings per token of 3.6. Not a lot of unlocks left. Also has one of the lowest supplies, 16 million, of which only 15 are circulating, so you can only get unlocked by another million. So both Aave and Maker are the staples of DeFi, of all of crypto. These are the two most fundamental DeFi projects. 2 of 3. The third one is Uniswap. Uniswap, Maker, and Aave are all of decentralized finance. You got your lending, you got your trading, and you got your over-collateralized stablecoin. It's everything you need for decentralized finance is these 3 powerhouses, and they have great tokenomics. Uniswap tokenomics are not as great. Obviously, 1 billion tokens out of $7 a token makes it a $7 billion market cap, but they can also dilute another $3 billion with current prices. Price earnings ratio of Uniswap is 100. Earnings per token are 7 cents. For Aave, price to earnings is 36 and $3.67 per token of 133. Now, Ethereum supply is 120. Possible dilution is possible. There is no supply cap, but it's more like deflation because Ethereum is ultrasound, and there are 2 ways to burn Ethereum. One is through blobs, and the other one is through transactions. Once transactions go over the limit, there is a burn mechanism from EI 1559, and Ethereum becomes deflationary ultrasound money. This means that even though there's 120,410,000 today, a year from now, there may be 119 million if a lot of Ethereum gets burned, if it gets used. So more users go on chain and use Ethereum and its layer 2s, more Ethereum gets burned. That's why Ethereum is ultrasound. Now, let's quickly just check the prices. Crypto just breached $3 trillion. Huge, mostly Bitcoin because it is $90,000 and it's 1.8 billion of that. Trillion of that, 1.8 trillion is Bitcoin. Fun fact, Bitcoin just flipped silver as the world's number 8 asset by market cap. $1.8 trillion puts it in the 8th spot in the top 10 assets by market cap. Gold is 17 trillion. So for Bitcoin to reach its ultimate goal of unseating and flipping gold, it needs to perfectly 10x from here. Poetic. Silver used to be money back in the day. It is now Bitcoin. Let's take a look at some revenue producing projects by fees. If you can see here, we got Compound Finance, we got Convex. Going down the line, we have Athena right here. It's one of the Aerodrome, right? Jito, Aave, Uniswap, Lido, and we got Ethereum. Off the charts over here, okay? The most revenue producing. Here is meme coins and their market cap. Currently, $121 billion of crypto market cap is meme coins. 100 of that billion is in the top 100 alone. And here they are. I might have skipped Nero in my analysis. Yeah, meme coins up 100 to 2,000% in a week. Will this last? I think not. Okay, so once this bubble bursts, there will be a rush for exits. And when everything crashes, you'll have to consider, why am I holding this dog coin? If you're holding one of these, one of these guys, then you have a justification for holding it during a bear market or holding it if it goes down. If Ethereum goes down 50%, you can buy it. You can hold it. You don't have to panic. But if a random dog coin goes down 50%, it may never come back. You'll go down another 50, another, all the way down to zero. Okay? Now, memes do have some meme staying power. Dogecoin has been around for a while. It's worth $60 billion right now. But there are thousands of memes being created every day. And you trying to pick the right one is a bit of gambling and lottery. Maybe there's some skill to it. Maybe there's some pumpamentals. There's people pumping it and they will dump it on you. And while it pumps, they're dumping. Okay, so you want to own fundamental investments that have underlying value. If you have Maker and it earns $300 per token and there's only 1 million of them, you know that within 3 years or 4 years, you get your money back in how much the protocol is earning. Okay, this is how you value stocks. How many years until I get my money back in this investment? Okay, a price to earnings of 10 means 10 years you get your money back at the current rate of growth. Obviously, crypto is on a parabolic adoption phase and will have a lot more users and a lot more revenue generated in the future. So these projects are fundamentally investable. Now, obviously, keep in mind what I've shared with you on this chart about price to earnings, earnings per token, and possible dilution. And keep in mind, when the unlocks are. For Athena, for example, it's a great project. Maybe just buy the stablecoin that gives you 10 to 30% APR, and you don't need to get the Athena 12.25 price to earnings ratio. It's a governance token. Will they share revenue with their token holders? Maybe. Maybe the regulation will ease up and everybody will flip on the profit sharing switch. That is the dream. But as of now, only project that shares revenue is Ethereum. Okay? This is why the ticker is ETH. All right. So the meme coin market cap is about 100 billion on just the front page of CoinMarketCap. Total is about 128, 130 billion. And it's kind of insane. These projects have no fundamental value, and it is fair to say nothing has fundamental value. It's all subjective. But it's also not right to say that, because companies have fundamental value because they produce revenues. And as a shareholder, you are entitled to profits from those revenues. Similar with blockchain protocols or projects that produce revenue. If they flip on the profit sharing switch, then you as a token holder get that profit. Now, there is $100 billion market cap, and in this meme here, I will do the rest of this video in memes because it seems people only get memes. And let me convey you the meme of the ticker is ETH. 100 billion market cap of meme coins. And there's only a little bit of liquidity down here. Okay? So everything else is froth. If people actually try to sell these and rush for the exit, everything crashes to zero. And that's what gives me apprehension of the current market. It is so frothy with the meme coins. Everything else doesn't seem overvalued, especially ETH. Everything else that is meme will result in an epic crash. Can it go up more from here? Of course. But higher it goes, harder it will fall. So it will probably ratchet up. And there is a saying in investing, which is the bull goes up the stairs, but the bear comes down the elevator. Keep that in mind. So what $1 billion of liquidity means that if all these people wanted to sell the 100 billion, there's only 1 billion that could actually buy it. So everything else is just paper money because if I make a meme coin and I sell one coin to myself for $1 and I make 1 billion of them, all of a sudden my project is worth $1 billion on paper, and that's its market cap. But if I try to sell that $1 billion of meme coin, nobody's going to buy $1 billion. So as long as people hold and don't sell, you can have these artificially inflated prices. So if you have meme coins that are up insane amount, please take profit into a stable coin or into Bitcoin, Ethereum, or Solana even. Something that will outlast the next bear market. Something that has some fundamental value in users. Okay, now we move on to the fun part. ETH wars, crypto wars. This is the Gwei. Gwei is the smallest unit of ETH that you can send and transact with. This is a meme I made a while ago of Mandalorian. This is the Gwei. Look at me. I'm the meme coin now. ETH and Coinbase measure their plans in centuries, just like Dune. Now, this is the most important part, one of the most important parts of Ethereum. One, if you stake Ethereum, which only 30 million of the 120 million is staked, you get the revenue. You're helping validate the network, and the fees go to you. Right now, it's about 4%. Other way Ethereum makes money for its token holders is the burn mechanism. A portion of fees gets burned, and this is akin to a stock buyback. So when a company has a lot of profit, one thing it can do is just hold its profit. It can reinvest it into R&D or expansion, maybe acquire another company or technology or make better products. They can do dividends, which is give profits back to shareholders. And the most important part is stock buybacks. As we saw with Coinbase's latest earnings report, they decided to buy $1 billion worth of their shares back because they think their company is undervalued, and this is a way to return value to shareholders. If they take $1 billion worth of shares out of circulation, it further concentrates how many shares there are outstanding and that are entitled to future revenue. This is opposite of dilution. When companies issues more share, then each share holds less value of the company. So the burn mechanism of Ethereum, also MakerDAO has this, is very positive aspect of this project that returns value to token holders. No other projects do this, that they have a way to return revenue to shareholders and do a burn back. So this is amazing. Ethereum is like a diamond that people are just overlooking for meme coins. The ticker is ETH. It is like a tall drink of water in the desert. The ticker is ETH. Ethereans know what the ticker symbol is, unlike those Athenians and Greeks. The ticker, this guy knows what the ticker is. He made it. If you ask an alien, what is the ticker? An intelligent, all-knowing, godlike creature would tell you the ticker is ETH. And once you're in space, you realize the ticker was always ETH. Now that you know the ticker, let's move on to you're not bullish enough. Okay? You're not bullish enough on Ethereum. Bitcoin is hitting all-time high. It is $1.7 trillion. Last time Bitcoin hit an all-time high of 70,000, Ethereum was over 4,000 to 4,800. So it has at least 30 to 60% to go just to be matched even. But Ethereum has improved so much more since the last bull market. There's so much more development that's happened on it. There's a burn mechanism now. There is all this institutional funds being built on Ethereum for treasuries and bonds. Everything that is interesting in crypto is done on Ethereum. decentralized finance, NFTs, you name it, it's done on Ethereum first, and then everybody else copies it. Ticker is ETH, and you need to get bullish on this, because this will happen. Right now, people are putting their focus on meme coins, and Bitcoin is getting most of the institutional money pouring in because of the Trump bump. But sooner or later, this will happen with Ethereum. It will just teleport past 10,000. What I'm doing, I'm not selling. Ray Dalio has a quote: "Knowing when not to bet is as important as knowing what bets are probably worth making." In my opinion, at this moment, it is not worth betting on memes anymore. They have gone up so much. Peanut went up 2,000% in a week. It's worth $2 billion. That is stupid. Now, the bet worth making is Ethereum, because the ticker is ETH and it's severely undervalued. It is the best project in crypto, has the most development, and the most interesting things that are being done in crypto are done on Ethereum. It returns revenue to token holders, and it buys back ETH through its burn mechanism. It is deflationary, and Bitcoin is sound money, but Ethereum is ultrasound. Why is Ethereum ultrasound money? Because it's deflationary. It burns money to use the network. So whenever you want to make a transaction on Ethereum, you have to pay the gas with ETH. Think of it as a fuel for the network. If you want to use your car, you have to put gasoline in it. That is the cost of you moving through physical space. For you to move through cyberspace, the digital network of Ethereum, you have to pay gas fees. If you want to execute a smart contract, if you want to send value from one person to another, if you want to mint an NFT, you have to use Ethereum to transact on the Ethereum computer. This is what makes it a commodity like money, like oil is. But we don't pay in oil, right? But there is this concept of a petrodollar. It's a dollar that's backed by oil, right? So in a similar sense, Ethereum is a commodity and a money, right? It's a commodity because you need it, you use it in transacting, in using the Ethereum computer, but also you can use it to purchase things. So it's both a commodity and money, and this is what makes it valuable. It is ultrasound because it burns ETH when there's high transaction volume. It returns value to ETH holders that stake Ethereum, and also those who don't, through the burn mechanism. It is the most economically sound project with tokenomics and revenue sharing out of any crypto out there. Now you know the ticker is ETH. If you choose to be an Ethereum and somebody asks you what is the ticker, you know how to answer. And don't forget, ETH has a roadmap unlike any other for the next 5 and 10 years, and it's constantly being improved. And ETH's plans are measured in centuries, not days, not single cycle. There you have it. This is why the meme market cap is frothy as heck, which projects have actual revenue and good tokenomics that you should hold. Even if the market crashes, these things would outlast to the next cycle. So if you get caught holding these bags, don't despair. I've held through 3 crypto bear markets, and as long as you invest in fundamental projects that have good technology and good way to return value to token holders, you will be all right. These are some of my ideas. I mostly hold Ethereum because it is the best one and the most proven one to return value to token holders. You know why the ticker is ETH? I gave you all the reasons. You do what you will with that information. Thank you for tuning in. As always, may the force of compound interest be with you. Peace.
Invested with my boy Delta, we cracking codes. Deep inside the market where the knowledge explodes. Navigating stocks where the rivers flow. Delta forgot more than 11 nodes. Analyzing trends, no one off the track. Forecast the futures, no looking back. Economy in ruins, but still intact. Building up our wealth, that's a solid fact. Delta, Delta code, always decoding. Knowledge is a weapon, ever for bowling. Invested with precision, never eroding. Delta's forgotten more than others are holding.